Picture this. It's the year 2024 and the housing market is on the edge of transformation. Will you be ready to seize the opportunities or get left behind? Today we'll see if we can't look into the crystal ball, talk about insights and predictions which will reshape the way you think about the housing market for years to come. Housing market predictions for 2024 could change in the next 6 months. We'll talk about what we've learned so far. Let's get started. First, we need to talk about where we are. The current housing market has a lot of trends and factors going on. Right now, there's a shortage of inventory and high prices. Classic supply and demand. If you don't have much supply and you have a big demand, then you're gonna have to pay for it. And this is causing increased competition among buyers, meaning multiple offer situations are still happening. That's what's happening right here anyway. Still multiple offer and bidding wars, and sometimes you're paying for more than you really intended to pay for. Plus, increasing the problem for shortage of listing, sellers aren't selling. They're happy with the interest rate that maybe they got by refinancing it last year or the year before, and so they don't really want to move, and they're actually happy and finding ways to age in place instead of looking more towards assisted living or nursing homes. So that's where we are right now. So how do we make the market get better? Where can we correct the market? We need to kind of slow down the housing market, get more listings, and like I said, with a higher supply, as long as we keep the consistent demand, it will lower prices, but they won't bottom out. Another way to do this is get more new construction. It needs that we've been way behind on supply of new construction for decades. And to increase the demand for new housing, we need to get some government grants or just have more reasons to increase building. A shortage in supply of listings isn't a reason to increase building. Builders have reduced their work since 2008, since the last crash in the market. So this is the time that we need to start increasing that, and we have indications that showing they are increasing, but we are so far behind it's going to take us a while to catch up. And as we all know, during COVID in 2020, there was a lot of problems with the supply chain that caused increasing cost of supplies to make homes. And unfortunately, because of 2008, we had a lot of contractors that just stopped building and started working other jobs. So not only do we have a shortage of supplies, we have a shortage of contractors. And so this demand is outpacing the supply in new construction. Of course, COVID also caused relocation trends. People were working from home and finding out that they could live anywhere and they didn't necessarily have to live close enough to be able to go into the office. And also economic shifts. Right now, so there's still tons of job openings, even though other sectors are having layoffs. So it's kind of a different market right now. You just have to see what's going to happen the next day. Lifestyle preferences are changing because of COVID, depending on what people want in their homes. They want a home office. They want more space to be moving into and having more things to do with home because they're spending more time at home because they don't have to go into the office. Another thing that happened during COVID was institutional investors. They were buying up large numbers of properties and holding them and keeping them for rentals. So then that was less supply to be selling. So again, about 7% of the market is what I read was these institutional investors had bought up these properties. That meant that was less properties that were available to buyers, especially first-time home buyers would be in that market. Of course, with any market, you're going to have seasonal variations. Right now, spring, summer, we're getting a lot of new listings hitting the market. So we are getting an increased supply in our listings right now, but as the buyers are still sitting and waiting for something to come on the market, those listings aren't going to sit around very long, and the market time is still really low. Now, when we get into the fall and the winter, that might die off a little bit, but right now we are getting an uptick in inventory. Again, along that same line, listings that have sat on the market for a few months, 6 months, are reducing their prices. So it's still a really unique market. Again, economic factors are definitely going to affect the housing market. Right now, we're working on the debt ceiling to get under control. Looks like it's going to get done before the Red Letter Day on June 5th. So hopefully that's going to get under control. But again, the job market's gonna determine that. And for our local area, economics are also an indication because, for example, Emerson just recently put their factory in here within the last 3 years. So that's a big job, 250 jobs, along with all the other available jobs out here. It does something like that is going to make a big difference in a small market like ours. Another thing that will affect the housing market, and it is currently, is technological advancements and how they are shaping the future. I'm sure you all have heard of AI and ChatGPT. It's a really big thing right now. Also, virtual reality and 3D printing is also going to have an effect on housing. The 3D printing, you can use you can print materials to make a house. Virtual reality, not really the same thing, but we do have virtual tours where they have 3D floor plans where you can walk through houses, so it's easier for you to buy from far away. And the ChatGPT and AI is going to make it easier to do things throughout the future as well. Along with that, buyers are demanding more technologies in their homes. They want smart homes, they want energy efficient homes, they want sustainable building practices. So all of this technology is going to come into play with that new construction, as well as currently available and the updates that you've made to your home. You have to realize that buyers are not just looking for a home. They want certain features and improvements done to the property to make it what they need it to be for their time in their lives. Housing predictions for 2024 include a shift in housing preferences. There's been a lot of change in different demographics over the years, especially in the last 2 years with COVID. A lot of people from the cities were moving to rural areas because they didn't have to go into the office anymore. They were able to pretty much work from anywhere. And this is both with home buyers and renters were able to do this. And we've seen a lot of remote work increased, and it also is going to influence housing preferences. They want larger homes. They want dedicated offices. They want green spaces if we're looking at multifamily homes, townhouses, duplexes, apartments. They want a green space because they don't probably have a yard, but they don't mind sharing a green space if they have a place to go out and enjoy the area. There's going to be a growing demand for sustainable practices and improve accessibility. All of those things are going to be influenced right now on what people are looking for in their housing. So now to get into some economic factors and predictions for 2024. Recently, the National Association of Realtors, or NAR, had their legislative meetings for 2023, and Lawrence Young had some slides that I am going to be able to go over and be able to share the information from you. He's the chief economist at NAR. So first, of course, we're going to talk about federal interest rate has been rising, as we all know, and so they're going to continue to do that until they get inflation under 2%. It was 2% back in 2019, and even down to even lower in 2020 when we had our crash, and it slowly has gone up, and it peaked in May of 2022, June, July, something like that, almost at 10%, maybe 9%, and it has gradually come down. We're almost to, in March, we're almost down to 4%, but we still have a long ways to go before we get to 2%. So that is a good sign that it is going down. But rents have not calmed down yet. They continue to be on the rise. They are on a 5-year high back from 2019, a percent change from a year ago. They're almost up to 9% change still in March of 2023. So why is this happening? Well, for one reason, people that can't buy because the supply is short are renting, and they're pushing the people out that need to rent and have the only option to rent. So again, high demand, low supply, you're going to have higher prices. Well, why isn't there being new apartments built, new houses to rent being built? Well, actually they are doing that. It's on a 40-year high that they've been building apartments. It did drop off a little bit after the last crash in 2008, but it's continued to go up, and it is consistently up over the last 2, 3, 4 years. So we are doing that, but it's been so behind for so many decades that we have a long ways to go. And talking about the economy, back in 2019, our deficit was only less than 5 trillion, and now we're up to 31 trillion. So all of that is a weight on our economy and makes people concerned about making a big investment like a house. So why is the housing market being held back? Because of that lack of inventory. We have weaker sales. Existing home sales are below pre-COVID levels. Everything bottomed out in March, April 2020. We kind of peaked in April 2021, and we've slowly become back down. So we are starting to stabilize and have less sales every year. New home sales are back to pre-COVID levels. 2017 we were low, and we're a little bit above that. We did peak again in 2020, new home sales, but we're back down. So we're kind of getting back to normal. Inventory of existing home sales, they peaked in 2008 when during the last crash. Right before that, then they've consistently gone down. You can see the seasons every year. They go up in the spring and come down in the fall. So we are way low down here. at 1 million units. Now, new homes are actually going up, so that's a good sign too, that we still have the new homes. Unfortunately, the median sales price isn't at an all-time high. Well, at least in the last 20 years, we're way high. We're all the way down at $150,000 for our home price in January of 2000. And now we're in 2023. We have come down slightly. It was a little bit higher in January 22. We have come down slightly, but we're actually looks like we're ticking back up again. So that is still a concern that we have prices so high. I've talked about this in many of my other videos about the importance of buying a home for the wealth of your family and of your inheritance and your descendants, your heirs. You can see that there's a huge gap between the renters of 2022 up to the renters of the homeowners of 2022 at 320,000. And there's just an even bigger gap. You know, we were at 250,000 in 2019 and a little bit less in 16. And there's even a larger gap between those years. So we can see that the equity in those homes give those homeowners more wealth that the renters will never realize, as they're just renting and giving their landlord money and helping them build their equity every year. So some places that have had huge price declines from a year ago, 2022 to 2023. California, no surprise. San Francisco, Los Angeles are big. Even Austin, Texas, which there's a lot of building going on there. Boise and Phoenix, Utah and Idaho and Arizona were big places to go once California just got super crazy during COVID. So those are starting to come down now. Now places are still rising in Oklahoma City, which I'm surprised. I didn't know that was a big place. But also Fayetteville, Arkansas. Right here we are in Arkansas. We're not in Fayetteville. We're in the central part of the state, and that's on the west side of the state. But still, people are coming to our area, and there are still places that are having gains, having price gains. And job gains also. Obviously in 2020, a lot of jobs dropped off because of COVID and people not being able to work or go into the office. Some places you just couldn't work depending on what you did. But a lot of places are having job gains, even with the big tech companies having layoffs. Arkansas alone is at a 5% increase. So we are still having strong buying activity, even on starter homes. There's multiple offers on a third of the places having offers on them. Over half of the homes sold are being sold within a month. That median days on the market is 29, which is the fastest time on average in history, except during COVID when it was maybe 1 or 2 days. And price reductions are bringing buyers back, but we still have a lot of new homes on the market that have higher prices. So there is that range there of new and reduced prices. So there is more opportunities for buyers as these prices are being reduced. One thing that we're not seeing is distressed properties. Back looking over the last 20 years, you know, they were pretty low here before 2008. 2008, the market crashed, so we had a huge increase of foreclosures. And now they're coming back. They came back down again all the way to 2020 when they had a freeze on the foreclosures. And then of course after that, then it's going to peak again once those restrictions are taken off by the government that you can go into foreclosure. But they're still really low, all the way back almost to 2000 lows. And you can see that on the MLS if you're looking for a foreclosure on any of the websites that have them. They're just not out there right now. So what else is driving housing demand? We have a population gain in the United States. We have 1 million more people in 22. We did have a lot of deaths, over 3 million. We had a lot of births, over 3 million. So that actually is a gain. We also have a lot of marriages, 2 million marriages. A lot of people get married and buy a house. Divorces are 690,000. Well, that was in 2021, but that's still a lot. And if you get divorced, oftentimes one of you is going to have to find a new home. Maybe you're not going to buy, but you are looking for a new home. People turning 30. There's over 4 million in 2022 that are turning 30. And this has become a new force that they are competing with the boomers, who are currently the biggest age group buying homes right now. So they're competing with the boomers now. And now that there's more of them out there, they're going to be even more contributing to that competition. So talking about forecasts for 2024, mortgage rates. Back in 2019, we were about 4. We went down in 20 and 21. Almost to 2.5. I don't think we quite made it to 2.5. But then of course in 2022, last year, we were up to over 5. And the forecast for this year, we're gonna be just over 6 for the remainder of the year. And next year, it's going to go back down a little bit, maybe 5.5%, about the same as 2022. So that's kind of idea of what to expect for the rest of this year and next year. Total home sales, new and existing, will be expected to drop off this year. We did kind of go up from 19 to 20 and 21. 21 we kind of peaked, and I can attest to that here. We definitely peaked and we dropped off a little bit in 22. We're expecting another drop off in 2023 as a forecast, and then we expect to go back up above 2022 levels in 2024. It'll be about the same as 2019 before COVID. So those are just some predictions for the housing market that we expect to see, and according to Lawrence Young from NAR. So strategies for navigating the future of the housing market now that we have predictions for 2024. Keep in mind that as a buyer, as a seller, as an investor, that you're going to want to be watching the market as you're moving towards where you want to be, whether it's buying or selling or just investing. You need to be financially prepared. Have your emergency fund. Prepare your funds for a down payment, closing costs. Anytime that, so that when you do have an opportunity to move forward, that you find the house that you want, that it's in your price range, that the interest rates are right, then that you can move forward. And keep watching the market so you know what's going to come ahead, and you can kind of maybe see and be able to forecast yourself which way the market is going. Stay in touch with your real estate agent so they can advise you on when the market is looking better for you and help you on finding different housing alternative options for now if you can't move forward right now and you need to, or if you are looking forward to the future, then they can advise you when things that are perfect for you do hit the market. Today we talked about where we are now, how we got here, why we got here, and probably where we're going. As we prepare for these changes in the housing market, it's crucial to stay informed and adapt. Start taking steps today to secure your future in the housing market of 2024, whether that means having a down payment, saving for your emergency fund, or preparing for an investment. Don't miss out on the opportunities that lie ahead. To get a better idea of where we've come from, check out this video I did of the last market update. Thanks for watching and have a blessed day.